Okay, guys, thanks for joining. We'll be discussing today MACD and SMA. And the screen you are seeing, that is from Thinkorswim platform. So if you have a Thinkorswim, they have a lot of things in the charts. Personally, I like it. I was using different charts, but I think after I see this one, so I think I'm not using anything. I'm using this Thinkorswim chart. It's much easier. So whenever you want to draw any charts or technical stuff, first of all, clean up your charts. So right now I'm going to do is after you log in and see once you get this screen. So I'm going to remove this everything. So you get a blank screen. So you'll see the candlestick. If you want to change it, you can change it from here. You want to kind of bar or line. So that's not important. So I personally likes the candlestick. Then you'll see the volume bar here. That is by default. Now we'll be discussing the MACD. So before you learn how to use the MACD, first you have to add the study MACD into the system. So I believe you know it. Otherwise, I'm showing you here. So go to studies and go to, basically you right click studies, edit studies. Then in the left bar, you have a search button. So just a MACD, just take this one, MACD first one, click add selected, and you see this MACD 12.26.9, this one, and apply. So now you'll see a MACD indicator added at the bottom of the page. Basically, this MACD is a lower indicator, it's not a upper indicator. So basically, a lower indicator means your chart, the price chart is here, and your indicator is here. And some upper indicator where the indicator will be applied on the price itself. Okay. So now this is a lower indicator. So now let's understand what is this MACD. So if you want to understand the MACD, so let me show you. So this is the MACD we selected. And what is the value of the MACD? So this is the default value, 12.26.9, and it is exponential. Okay. So whatever you're seeing, so MACD stands for moving average, convergence, and divergence. Okay, we'll see how it is working. And all these averages are exponential, not simple. So I'll basically people keep the default as it is. And there will be two lines in this. If you see the MACD line, there will be two lines. Okay, one line is signal line and another one is MACD line. Okay, the signal line is signal line is this one, the MACD length 9. Okay, I'll show you which is that one. That's the signal line, and there is a MACD line which is difference between 26 and 12. That is your EMA 26 and 12. Whatever the line comes, that is your MACD line. Okay, so one is MACD line and one is signal line. If you see here, so the blue one is MACD line and this one is signal line. So signal line. Okay, so now, so what happens is, so if you see here, and the middle one is zero line. If you see the straight zero, this is zero line. Okay, above zero is positive, below zero is negative. Now, how do they interpret this one? So if you see the blue line, which is your MACD line, crosses the signal line. Signal line is it is kind of a white line. So let's make it a different color so that you are not confused on this one. Let me make it white. Okay, that was white. So when the MACD line, that is blue line, is crossing the signal line, okay, so it cross above, that means it's a bullish signal. At the same time, watch the chart here. So what it did, if you see the MACD cross exactly here, you get a little bit, this was in this shape, little bit is trying, but all of a sudden there is a jump here. So when the jump, If you see here, the MACD line and signal line both spread across. Okay, when they do that one, you are expecting a move. Okay, and as long as they keep spreading each other, right? The more the spread, more volatile, more upside, or more price action, right? If you see here till this point, keep moving. So you see here, it is moving, it is spreading, it is moving, it is spreading. This is on the Tesla. Okay, this is just a symbol Tesla. So that means if you take a position here, okay, and Tesla moved from 844 to 1215 when it was on October sometime, right? But doesn't matter. So that's the concept. So now it went. So now it had little bit struggle here. Now all of a sudden there is a drop here, right? So the same thing. So when the MACD line crosses the signal line, so here is your entry point and here is your exit point. Okay, you can you exit here? Yes, you should. Okay, whenever you see this kind of, it's not moving anymore, it is showing some weakness. Okay, how do you know the weakness? Okay, so now if you see here, you can take the help of this one. If you are not able to decide here, you should be able to decide from here. Okay, if you see here the histogram, these are called histograms. The histograms keep increasing. You see here, histograms keeps increasing. Okay, so you saw a big histogram here, that is bullish, right? And where? In this point. Now what happened? It is bullish. It was up. This was also up. But do you see this is green or this is gray? This is gray. Even if it was up, what happened? Still, it is not a green signal. It's a neutral signal. Okay, or it's kind of a downward signal. So that's the divergence. What is the divergence? Divergence is you are seeing it's up, but signal is telling no, I am not up, I am going down. I'm seeing the weakness. I'm seeing the weakness in the trend. Okay, so that's how. So even if so, in that case, what happens? In this candle, you have a better chance to exit from the trade and wait for a bounce or something like that. If you want to short, you cannot short it right now here because it is not a complete reversal. But it's definitely, if you entered here, you should take some profit here. Okay, then wait for it, and at the same time you see it is curving out, and in the cross, when the cross happened, is already coming to your opening position here. So by the time you get out here by the cross, you are already late. So when you are exiting, if you exit on this 1-2 candle, then you are in profitable. Though it's very spread, you might, does it happen that it will go up? It can, okay. But the signal is telling, no, I am not ready. It is showing some bearish. That's why the color is not changing. Now slowly what happened? It had a drop, again bounce back. Even if you are in the call still, you had a chance to sell it here. Okay, and you see this one, what happened? You see this is down line. This is also down line. Though it is down, it is going up. This is the divergence. Understand? You see this is going up, but the signal is, your signal is what? Down, right? So this is the divergence. That means you can confidently sort it here. You can confidently sort it here. Why? Because if you see your histograms, they are very red. Okay, you are already in the below zero line. So once the signal is below zero line, it turned here. Okay, basically it is not. The histogram is red. That means it's a downtrend, and it still has not turned to cross this one up, but it is up. So this is the problem here. So if you see this one, you'll be thinking it will go up, but actually it is going down. Okay, so at this cross, you can sort it here. Then you see here what happened. Now you want to go long again. Now follow the cross, right? So again, the cross started here. Okay, cross started here. By the time Tesla has gone up from here to 902 105, almost 200 points. Okay, but if you want to catch it earlier, if you want to catch this earlier, right? How do you catch this earlier? Before it cross, you see how the histogram is working. So it is loosening. The red is loosening, right? Now red is fading out. Okay. So you can take the thing here or when it is crossing, but that is late. Okay. If you want, so basically this also you have to understand a little bit candlestick on this, but this was the right point to enter, take a chances with the very tight stop loss if you want. But that was a good entry point to take the entry earlier based on the cross. So on the cross, you have another few points upside, right? Now it was not the move like this one, but you watch some, right? Now because of this one, you had something, then you got, okay, it is little bit weaknesses, okay? Then it started weakening. So you see that the more is kind of a, it's a, if you see this one, it is a complete little bit more downtrend. Now it is following the downtrend. So again, the cross, and that cross gives you the confidence to go short again. So basically you are following the cross on the MACD. Okay. You are following the cross. Okay. If you follow the cross and take your points, you don't have to wait till the cross finishes to take the profit. You always have to have a profit in mind. Okay. Then again it is kind of a weakening. And the another thing is, as long as the signal lines and MACD lines are below zero line, you are still in the negative territory. Okay, you are not entered. Even if it crosses, it is tough to say it will go upside. But the cross happens in the upside, and the same thing. If as long as these lines are in the upside above zero lines, right? You see above zero lines, you are still upside movement, right? And all of a sudden there is upside. So if these lines are in up above zero lines, you are still bullish. Okay, that means your trend is still bullish. Okay, the moment it crossed to zero line, your trend turned to bearish. Now what happened? The moment it crossed here, these two lines, what happened? Even if it is going upside, you see here. Look at this one. Okay. Now this one basically it came up here, but it was not able to survive. And if you see here, so if you know how to draw the support and resistance line, basically it hit the resistance here and bounced back, right? That's what it happened. So now it crossed the zero line, it crossed this one and came to zero line again. And the red histograms are increasing, the bars are increasing. The more the bar is strength, okay, increases, your strength increases towards the same. Like right now, the strength increases towards the downside. Now completely down. Now it started. It's a kind of it's not able to decide what to do here. Okay, so basically it came down, and there is a big red green candle. That means it's trying to go upside. So again, it went up, but still not able to come down. But now here is a clear upside movement. How do you know it is clear? You don't know, right? So then you have to wait. So 1, 2, 3 might be this third candle. By the time this is spreading, you can take some risk here entering. And if you see here, this is another pattern also. And I'll tell you another, and there are various things. It's not only MACD is going to give you the confirmation. There are other things you have to consider. But how to interpret the MACD, that's what I'm showing you. So the cross again, you don't know the cross is going to spread this much, right? So you are watching the cross. First day cross, second day spreading, third day spreading, right? So third day is the entry point, okay? Now entry point, if you enter here, 873, and you see here what happened, and if you should be happy, if this MACD line went above the zero line, that's a more bullish, right? And it's similar situation like this. right? You see here, so now 873 to 11 and something, 1140, right? Another $300, $200 profit there. Now, if you see here, this is the latest, it is doing a retracement. So is it going to fall or so? You don't know. But good thing is these lines are above zero lines. So good thing is above zero line. As long as it is above zero line, you are still in the upside movement. You are in an uptrend. Okay. The same thing. I'm not sure you have before. So, and you can choose, this is a daily line. So you can choose any time period. Okay. Suppose you take just example 1 hour. Okay. You can see the 1 hour thing here. Okay. Like this is 3 a.m. Generally its market is not open. Okay. Let me show you the other one. Maybe that will clear. Because that is 24 hours, right? Look at this one. It will give you a clear picture. Okay. So look at here. So this was going up. You see here, the cross happened here. Okay. The cross happened here. The cross is here. Now it is downtrend, right? But there was some down here. But this is a divergence. This is telling I'm going up, but the price is telling I'm going down. So that means you can take advantage of this one because it's actually going up. So because small candles, so you can take buy, then boom. Then after that smallly, you see how the curving, you have to watch this curve. Before that, you have to watch this green is fading out. The green started fading out, that means your signal is getting weaker. So green is faded, but if you see the upside, that means there's a divergence. Okay. So that means you should be ready to go short. Now, if you see here, it did a cross and it's night 1 a.m. You don't have to worry. You are not trading at that time, but 6:30, what happened? 6 o'clock. It had a, you see, this is a divergence again. When the divergence happens, your signal is telling something and price is doing something. That is the divergence, right? Your signal is telling I'm down, but price is telling I'm up. So who is the winner here? Signal or the price? Signal, because signal is considering something. It is calculating your 26, 9, 13, then 9. So it is averaging all those. So now it knows what you're going to do because it takes the price action from here. Okay. So that's okay. Even if you're going up, you are not going to survive here. Okay. So that means the guy who is watching this one, so they see a divergence here. Okay. Once there is a divergence 1 hour, they sort here. Okay. Sort and just do some kind of a stop loss or something here. You don't have to worry on this one. And what happened? Boom. Okay. You know how the ES works. I think if you don't know, but one ES is 50 points. Okay. One ES is 50 points. So suppose you sort it here, okay, at this level. So what is this? 4580. Suppose take 4580. Now, how many points did you drop? So 6 o'clock it opened, 6:30. You sold at 4580. Okay. Now it dropped. Now after 1 hour, 2 hours, right? Next 8 o'clock. Okay. 1.5 hour. It is 4544. Suppose it has been come down to here 4540. Okay. So 4540. So 80 to 40. How many points drop? 40 points. One point drop is $50. 50 points. So the $50 you're making. Okay. So 40 points is how much? $2,000 in just 2 hours. 1.5 hour. Okay. 1.5 hour or 2 hours, 9 a.m. So 2 hours. 2 or 2.5 hours. Okay. And if you stay little more longer, okay, you see 4580 and what is this one? 4510. How many points? 70 points. 70 into 50, 3,501 micro, 1 micro US. Sorry, mini US. Okay. Now there is a little retracement. Again, it's a disaster, right? So I think I don't know what date is this one, but it is for April 4th. That's what happened. Okay, it went down too much, 100 something points. Okay. Now let's example. So what is happening here? You see here what happened? The cross, then red. As long as the red and spreading, you don't have to worry. Okay. Now keep going, keep going, keep going. And what happened? These lines went below the zero line. So when it is below the zero line, you are negative. Now, this is a 1 hour chart. Okay. So now again in the same day, it started crossing little bit. But because you see the how the movement, you don't expect again V shape here. That means the momentum or the sentiment is totally negative. Okay, even if it are bounce, it will not bounce a huge, and don't try that. Don't think that it's going to bounce completely to the upside. It will take some time, and if you see here, it did. Okay, in the overnight again afternoon, it tried to do that one because it was a very negative. You see here what happened next day. Again the same thing. Okay, 6:30. This is 6 o'clock, right? 6 o'clock, it did a bounce again. You see here, this is again a problem. In the 6:30, it did a big bounce, 7 big bounce. See here, MACD is not changing. It's not crossing this line. It's already crossed down. It's not crossing up. So what happened? 6 o'clock, 6:30, 7 o'clock, still market open, it is up. 8 o'clock, still it is up. 9 o'clock, still it is up. And finally, what happened? 10 o'clock, it gave up because MACD is telling, signal is telling, I'm not ready to go up. Okay. And this is the divergence. Okay. This is the divergence. Okay. So, and you'll see, okay, this is a resistance line, whatever. Boom. So basically, in this case, you are not going upside. Okay. You are not trading upside. You are either you don't trade or don't trade upside. Okay. Now you wait, and in this candle confirms, and this candle is your entry point. Okay, this candle is your entry point, and if you see entry 4495, and this came down to 4453, 40 points, $2,000, then go home, right? Then again little retracement, again you enter here, this is the entry point here again, 4453, again 40 points. Okay, that's it, over. But this is towards the night, you don't have to worry. Okay, but once you take a 2000, go home, close the chapter, close the trading, and go. The same thing. And I'll cover futures later on. If you are not doing futures, you can like when it's unlimited trading, you don't have any PDT rules and stuff, and but it's easy to show you the technical diagrams. Okay, so this is how your MACD works. I hope I am making clear to you guys. Okay, so I think you can take advantage and do some back testing with the different time periods and see if you want, you can take advantage of this kind of crossing. This is a very favorable and very powerful indicator than any other indicator in the market you use. Okay, in the free indicator, people are using a lot of other indicators, but this is the most powerful indicator one trader should have it.